The private credit gives an opportunity for you to get funded in non-traditional ways, which is how most wealth gets started. Your susus, your families, other cultures coming in, invest in a pool of money that goes here. You reinvest that money to give it back to the community for the community to reinvest into another venture or another business. That's how this thing works, right? So the bank spent decades saying no to our businesses, and now there's trillions in flexible capital out there looking for borrower. Is this our opening or is it a trap? Is it our opening or is it a trap? I think it's our opening. It's a way for us to get in. But what do you think? Now, specialty finance and asset-backed private credit can step into the gaps where tailored small balance consumers and small business loans, exactly where many Black entrepreneurs operate. So these are the intermediaries between you getting funded and you not. If banks aren't giving it to you, we have to look for alternative sources for capital, and private credit offers that. It's increasingly accessed through fintech tech platforms, which lower the frictions for borrowers and the big banks overlook. The nuance, the same flexibility that can replicate predators' patterns, high cost consumers, or payday style lending, if it's not structured and regulated well. Now, your instinct is probably more access to capital is automatically a win for our community. Access without knowing the terms is exactly how communities get extracted from instead of built up. Now, this is a great opportunity, in my opinion, for anybody to get lending that they can't get it through outside source, more especially if you're Black or minority, right? However, you need to understand the stakes and the terms of these lending so that we're able to do a return on capital and we're able to get relent. Every person affects the next person, believe it or not, right? The very thing that makes the private credit a lifeline, no rigid banking rules, is the same thing that lets bad actors in, right? And can destroy the process. So if we're going to go after this private credit, we just got to make sure that we're doing the right thing. We got the right thing. We got the right product or service. We get the right thing. We get the right partner to help back us with this private credit lending. And what other resources do they have to help these businesses grow? Not only just lending out debt to us from a private credit standpoint, but what ways can you help me leverage my skills for growth in my company for whatever product or service that I'm offering for us to be successful and for you to be successful? There's a tie-in here, right? Not only are you just giving me money that makes it seem like I'm just a risk and have to return the capital, but now we're both in this investment to pan out because you got to lend back to your LPs. I got to be able to grow my business. We got to pay you back, and there's got to be an exit. So now we created a partnership with this money and not just a banking institution that's knocking on our door like Mr. Scrooge, where's our money that we lent you, right? Does that make sense? So the real win is never just getting the money, it's knowing what to ask for before you even sign it, right? So where are you seeing private credit show up in your own life? Businesses lending, the fintech, lending platforms, the buy now, pay later, small business funding, increasing your 401k and wealth platforms. This happened with the 2025 executive order, opening retirement accounts to private markets. Now you're getting into private credit, right? So the question is to ask a borrower or before you receive money or the investor that you're looking to go after is, what's the real all-in rate, not the headline rate? What's going on here? What's the rate of what's the interest rate? What's all the stuff that we're going to do? Typically, most people are at prime or the Wall Street Journal prime plus 2 or 3%, depending. Is it a senior or secure? Where do I sit if things go wrong, right? If it's a senior or secure, where do I sit if things go wrong? If something happened, what's the mitigation risk? What happens to me? What happens to the loan? What happens to my business? What do you pull? What do you don't pull? How can you help me if there's a need to be helped? But you want to position yourself like, hey, we're getting lending. Business is doing great. We're taking in outside debt for growth. And the growth is going to do A, B, and C. Here's how the money's going to return, and here's how we're going to return lending or pay back the loan that we got from you. Does that make sense? That's how it works, right? And what happens if you miss payment? You want to know all the details of this so you know exactly where they stand from a lending standpoint and where you stand from a borrower standpoint. But the private credit markets is out here, right? So we just walked through the private credit. I think that private credit is one of the strongest institutions that's out there. More to follow on as we continue to divest this story on Money Market Breeze of what's happening in the world of private markets, private credit, and private equity.